Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo, Modiba, and thanks for joining me. Tonight, I'm joined by Dexter Mahachi, Research Analyst at Momentum SP Reid Securities, for a closer look at our favorite subject, the Nigerian cement sector, specifically talking about Dangote Cement and Lafarge Africa. Dexter, thanks for joining us.
Always a pleasure.
Our favorite discussion, cement.
Of course, of course.
What does the current environment look like in cement for Nigeria in particular, but the region as a whole?
The last year was a bit tough for the Nigerian cement sector. It doesn't grow as fast as it normally does.
Right.
Grew only about 2% to about 21.5 million metric tons per annum in terms of consumption, rather than the normal 6, 7, 8, 9, 10% that it normally grows at.
Right.
And part of the reason was was two factors. If you remember, last year we had there was a period of uncertainty while there were elections.
Right.
And this was a period of time where Goodluck Jonathan was basically replaced by Buhari, the new
Right.
president.
Right.
And of course, during that time, business kind of slowed down as well. And then we also had the instability in the northern part of Nigeria continuing.
Right.
Boko Haram still continued to be a bit of a menace, and business for cement companies actually slowed down in those areas. Those are the two main reasons why, of course, cement consumption was down. There is, of course, the ancillary reason of the fact there's a slowdown in terms of consumption of oil, and of course this has filtered through into the Nigerian economy not really doing so well because of their over-reliance on oil as a source of tax revenue and so forth. So it's a combination of reasons really, but all in all, sector grew about 2% or so year on year.
Which is actually strange given what we've seen over the course of probably the last decade in terms of performance of the sector as a whole. And how have the underlying companies held up operationally?
Operationally, Dangote has done surprisingly well.
Right.
Its decision to try and...
We seem to say that quite often.
No, they are doing well. You know, you
Right.
can't really fault them for their strategy. They diversified their earnings from just relying on Nigeria to almost like a southern part of Africa, and also eastern part of Africa as well. That has served them well, because you find that the regional contribution has actually increased by close to 20% in
Right.
terms of their revenues. They used to get about 92, 93% of their revenues in 2014 coming from mostly Nigeria.
Right.
This went down to about 70% of the revenue coming from Nigeria.
Wow.
And that in part reflects the ramp up in production of the Tshepo plant in South Africa,
Right.
Zambia coming to the fore, and a few other operations around.
Okay.
Also coming through.
Well, you know, we're in Dangote. What do prices look like? Have prices held up in this current environment? Volume growth has been muted. Has prices held up?
Prices have actually fallen quite a bit.
Right.
Dangote was actually responsible for crashing the price in terms of the cement price in Nigeria.
Okay.
It fell about 15 to 20% in the fourth quarter,
Right.
to about roughly 1,200 naira or so, 1,200, 1,300 naira or so.
Okay.
And part of the reason they did this was to actually sort of show up the volumes.
Right.
And also I think they were just trying to basically boss everybody around.
Is this them bullying the market in essence?
Them more or less trying to gain a bit of market share from the other producers.
Right.
Naturally, what happened is that Lafarge Africa and Bua Cement and some of the other cement players had to crash their prices as well,
Right.
which meant that they suffered a bit in terms of their profitability.
Right. In terms of margins, what does the margin picture look like for Dangote in this current environment?
Margin picture still looks solid.
Yeah.
They fell a bit. They used to get gross profit margins of roughly about 63%, down to about 58%,
Right.
which is still quite a bit.
Yeah.
Net profit margins also down marginally, but only to about 30%.
Okay.
Lafarge Africa, in contrast, the GP margins fell quite a bit,
Yep.
and the net profit margins down to about 10.10%,
Right.
from about 12% or so.
Okay, so a difficult current environment, these
Yeah.
businesses are having to be agile. In terms of, painting the picture of the budget,
Yeah.
in terms of the outlook for these businesses going forward, or what do you think it looks like given the recent budget that was passed?
Look, it still looks solid for cement companies. The Nigerians still need to put quite a bit of money into infrastructure.
Right.
So there is a portion in the budget for infrastructure, of course, and naturally for cement companies such as Lafarge and Dangote as well, they are going to get a bit of those monies coming through to the bottom line. But you have to remember that a large portion of the demand for cement in Nigeria isn't coming from the government per se.
Right.
It's coming mostly from private sector players.
Right.
From estimates from Lafarge is that there's a housing deficit of roughly about 17 million units. So you find a lot of people who manufacture, who use cement are guys who are making blocks, which are used in housing, walling, and stuff like that. So that accounts for a significant portion of cement demand in Nigeria, to the extent that if you look at last year, the reason why we didn't see such a dramatic drop in terms of cement consumption, and cement consumption still increased, be it at about 2%, is because of mostly the private sector. The government sector was more or less stagnant because of the length of time it took the President Buhari to actually announce the cabinet ministers, and in effect you'll find that the ministries were more or less in a sort of static position in terms of driving through projects and stuff, mostly because they weren't sure who the new ministers were going to be. So you find that just in a nutshell, the private sector consumption accounts for the bulk of cement consumption in Nigeria.
Right.
And this has been robust, and we're expecting it to continue to grow going forward into 2016 and beyond.
Okay, so now for Dangote, you spoke a bit about ramping up production outside of Nigeria. Is that picture likely to continue? Are we likely to see faster growth coming from outside of Nigeria than inside?
It's a bit of a mixed picture, really. Nigeria is still growing in terms of cement consumption, but so is the region. And we think that Dangote is in a very good position to actually benefit from all of this. Part of the reason is, if you've been following some of the news stories, they recently got a $2 billion loan or a commitment from China.
Right.
Now, if you recall, last year they had pledged to expand capacity and production capacity by about 25 million metric tons per annum,
right,
which would cost them something about $4.something billion. Now they've got about 2 billion. So chances are, with cement consumption remaining robust in West Africa, East Africa, and Southern Africa, they're going to be in prime position to actually benefit because of their newer plant, the greater efficiencies, and also plus the fact that they are very good operators of their plants and stuff. They haven't faltered in terms of the rapid construction we've seen over the past 5 to 10 years, and them actually delivering results, financial results yet.
So is this a company and a stock that you're still bullish on?
We're still bullish on Dangote.
I like that. Very definitive. Very definitive. Lafarge, in terms of their operational performance, outlook, margins, what's the picture there?
It's been a bit of a mixed story, really. Their revenues were only up about 2-3%. Versus those of Dangote, which was up to about 25 to 26%.
Right.
And part of the reason why they had, in the last quarter, they had a bit of a torrid time. They had to reduce prices. Part of their plants got flooded. They also had the annual shutdown at the same time as well. So this really affected them. However, going forward, some of the once-offs which they've experienced, for instance, they had to pay a lot of restructuring costs because of the merger between Lafarge and Holcim. Yep. And some of those once-off costs are going to fall away. So it looks a lot brighter for them in terms of the future. But the past year was not brilliant. Right. So I think this is mostly reflected even in the share price. Year to date, the share price is down something like 23-24%, whereas that of Dangote is more or less down about 5.3% or so. Right.
So Dangote continues to outperform.
Dangote continues to outperform the rest of the market.
Right. In terms of, I guess, the picture, you touched on the current difficulties. What are the chances that they can actually stabilize and grow revenue quite impressively going forward?
For both companies, the prospects look good.
Right.
Dangote, because it's still expanding, and it's also in a position to also benefit from the pioneer tax reductions as well.
Okay.
Lafarge, the same. They're actually planning to bring in new plant in Abuja, and I think it should be Abua as well, state,
Right.
where they're actually constructing new plants. So it looks okay there. For Lafarge, chances for them to do well in future actually come from the fact that they're trying to reduce some of their operational expenses, mostly coming from the energy mix that they have. They're trying to shift from LPFO towards gas and coal.
Right.
So you find Ashaka, which is one of their subsidiaries, is actually ramping up the use of the coal plant that they actually intend to bring online sometime later on in the course of this year.
Right. And the outlook for margins? Similar?
Margins will definitely improve, especially those for Lafarge.
Right.
With Dangote, they're already very high, but we expect to see them fall a little bit.
Right.
But they'll remain easily one of the most profitable cement companies in Africa.
Is it fair to say that over time, over the very long term, that
Yeah.
those margins across the industry really will start looking a little bit similar to South Africa in terms of margins perspective?
They can, but
Okay.
it also depends to a large extent on what is the developments within the other regions and in terms of consumption of cement and everything.
Okay.
Because that might actually start to show up the margins if those businesses, for instance, the plants in Tanzania and Kenya that they're trying to bring up, start to perform and do quite well in terms of their margins.
Perfect. Let's leave it there. Thanks to my guest, Dexter Mahachi, Research Analyst at Momentum SP Reid Securities. That's all from Buy Africa this week. Remember to follow me on Twitter, that's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.